And welcome back to this special live broadcast of the IDC Dialogues, where we're focusing on the strategies needed to bridge Africa's infrastructure gaps. Still with me in the studio are Ufikile Khumalo, Divisional Executive for Agro and New Industries at the IDC, Dr. John Tambi, who is NEPAD Coordinator, Presidential Infrastructure Champion Initiative, the PICA, and Anton Boshoff now, who is Chief Operating Officer, Big in Africa. Also still with us from our bureau in Lusaka, Dr. Freddie Kweziga, who is Resident Representative of the African Development Bank in Zambia, and from Nairobi, Sam Mambo, who is Director and Head of the Transportation Unit at GIBB Africa. And I'm going to come to you, Sam, because we tried a moment ago, but there was a mistake of some kind with the infrastructure link between Johannesburg and Nairobi. Paul made the point a moment ago that in East Africa things have gone pretty well. There's been good cooperation and good capacity, and things have developed well. So the infrastructure outlook there is good. If that is the case, I would think you would agree with him. What have you done right in East Africa that has opened the doors and ensured a connection?
Yeah, I think the governments have come to the realization that some of these multinational projects, projects that connect various countries, number one, they will be more viable and more attractive to donors. I can give you an example of Arusha-Namanga Athi River Road that starts in Tanzania, ends in Kenya, which has just been completed, funded by ADB. I think I would say it was a success story. And we are now cooperating within the East African region to have these one-stop border posts, and the donors are quite keen to finance this. One, to avoid a lot of wastage of time, other borders, and number two, to improve on the traffic flow at these borders. So we find that projects that go across borders, they become more attractive to donors and also for the East African integration. The East African, as somebody has said, now we are talking of 5 countries that constitute the East African community.
Okay, well, let me bring in Anton now. Anton, we had Paul earlier, and he said he was someone who scouted for opportunities on behalf of companies. You're one of those companies. So what's your experience and your reaction? You've been listening to the conversation.
Thank you, good afternoon. Yeah, Big in Africa is one of the leading consulting engineering practices in the country. And consulting engineers is really where the tech eats the tar in project preparation, where linking donors and linking the financing side with the owners and the operators. Our biggest challenge in Africa doing business in infrastructure remains project preparation. Now, project preparation deals with risk mitigation, and in our experience, 3 sets of risks exist. Firstly, technical risk. Secondly, institutional risk. And thirdly, financing
Well,
risk.
let's take each of those. Technical risk?
Technical risk, 10%. Everybody can do it. Everybody can design. We're competing with the Chinese. We're competing with the Europeans. We're competing with the US. So there's technology available, standard practice to design, as long as it's local standards. So financing, 10%. Financing is available, a lot of finance, but finance follows projects.
It doesn't seem to be a problem with funding. There are a lot of institutions that the money is available if it has the right avenues to be spent on.
If it has the right avenues, and then that lies the secret.
Yep.
So institutional risk, 80% of risk lies in project preparation on the institutional side. And if we say institutional risk management, it's all of those cross-border issues, it's political issues.
Give me an example where a project that was a good project founded because of that institutional risk issue.
The North-South corridor. You can just imagine linking all the political and regulatory environments across a couple of countries. Question is whether that project is on the same priority list for each and every country. And that you'll find where the disconnect is. So one country this is priority A to formalize the borders and get the one-stop border posts going. It's not as high as a priority for other countries.
Well, let me throw it back to Fikile and John as well. There's been an Organization of African Unity, the OAU as it used to be called, I think since the late 1950s, early 1960s, a very cohesive body when it came to fighting apartheid and very effective in many ways, and certainly spoke with one voice on some issues. Now it's the African Union rather than the OAU, so it's not as if there is no body that can organize coherence, get together, if necessary, perhaps bang a few heads together in their countries where they deal with each other at a lower level. So why haven't they?
There's no question. The question is not why haven't they? They've done it. And we have to be careful when we talk about infrastructure in Africa. We should try to differentiate between national infrastructure development and regional infrastructure development. The question is, if you develop your national infrastructure, as long as the region is not developed, you'll not go anywhere. So now, the AU, or the NEPAD vision, we're looking at the regional integration, and the foundation for regional integration is the infrastructure development. And we have answers to that. For example, I'll give you two success stories before I move on. One is the Presidential Infrastructure Champion Initiative, whereby the head of state have selected regional projects to champion, to bring visibility, to help in the resource mobilization, and to make sure within 5 years they are completed, fully implemented. For example, Algeria is championing a project of the Trans-Sahara Highway Missing Link, a 200-kilometer road in Niger. But Algeria is championing it. That project will go for construction next year. That's a success story. Now, under PIDA, the Program for Infrastructure Development, you have the Ruzizi hydropower project for Rwanda, Burundi, and DRC Congo. 50% is being financed by the private sector, $450 million for 145 megawatts power for the three countries. These are success stories, and these are the way Africa should move forward.
Well, it sounds like we can learn from these, Ufukile.
Yeah, absolutely, I think we can learn. And if you go back and look at the history of these organizations, whether it's regional states coming together, communities, I think we have to be honest and say that there has been a lot of progress. You know, I think right now the issue is not about what needs to be done, it's about how do we harmonize these things. You see, PIDA is a program that prioritizes certain sectors which are cross-national, and through that prioritization you are able to redirect your efforts to make sure that the constraint that you have, monetary constraint that you have, you can channel it to this project that will have the maximum impact that will be felt by all the countries. You see, the reason why infrastructure is so important is that you cannot industrialize, you know, without adequate infrastructure. The countries that try, I mean, the cost of doing business is very high. So if you want to compete as a continent, right, we have to focus, and that realization is there. And that's why, I mean, there's even talk about Africa Free Trade Zone. That extends now. It's not only a few countries, you know, in that area, but there's about 26 countries that are now starting to talk. The challenge, obviously, is the implementation, the harmonization. But we have to give credit that there's inertia, the wheel is in motion, it is turning. Obviously, it's not turning fast enough for what we want, but we have to acknowledge that at least it is turning. I think it's very easy today to say, looking at the progress that has been made, you know, one can easily postulate that I think the problem will be resolved, because everybody knows the problem, what the problem is. It's just the implementation. I think the mechanism of working that out is improving. I mean, in the past we had challenges that we had three different communities with members, you know, multiple memberships. It just goes to show that these countries are interested in trading with everyone, but there is no one single body. And I think the Africa Free Trade Zone is moving towards that direction, you know, but we have to harmonize the treasury, the other functions as well must be harmonized, you know, communitary monetary issues. So there's a lot of issues that needs to be done. Even the EU, as you speak now, it's not complete yet. There's still teething problems, but I think there is hope.
Let's bring it back to Anton and let's talk private sector and governments. You've got funding from governments, you've got investment from private sector. Let's distinguish it in that way. I know it's all investment in infrastructure, but government brings money because it needs to do big things. The private sector may sometimes be resented, but in the end it has to make a return. And the word bankability came up earlier, bankable projects and so on. I sensed a frustration, Anton, that business meets frustrations. Is business not sometimes unrealistic? They would like everything to be neat and tidy, and they just go in, set up the project because they know how to do it. But the reality is you've got to negotiate. You've got to harmonise, is the word that we've had. Should the private sector try to harmonise things more?
I think private sector is definitely trying and starting to play a lead role on project implementation harmonization. Because strategy and policy setting cross-border also poses its challenges. I mean, your worst nightmares are born from the best intentions. Policy level, one side. Implementation and getting the projects prepared, and private sector plays a huge role there. You'll find project preparation units being set up in private sector, being financed by venture capitalists. All of that, private sector are doing and initiating and mitigating those from policy and from strategic investments to get it to a point where it's bankable and ready for design and implementation. So I think private sector is playing its role. Obviously there's a return required, but there's definitely still a disfunction between policy and the real implementation side. Let's
go to our guests in Zambia. That's Freddie Kwesiga and Sam Mambo in Nairobi. Freddie, you first, looking at the private sector in Zambia, you know, the partnership between them. If you've got a government, you've got a private sector. If you're looking at funding of infrastructure in Zambia, how much will come from government? How much will come from the private sector in Zambia? How much will come from outside? Is it possible to break it down crudely like that?
Yes, I think that's a very good question. The public coffers must provide the incentive for the private sector to move, but also the private sector must take advantage of this emerging infrastructure areas so that it can help build and implement these ones. I'll give an example. We recently concluded a project to generate 120 megawatts of electricity at an existing dam in Iteziteji. And we have had the government put in equity through the ZESCO, the company, electricity company here. We have had Tata in India come in, and we also African Development Bank, European Investment Bank, and the French FD have come in to put money together, both from the public and private sector window, to put this project on course. I think this is a very good way to go in a PPP arrangement. And I think I have a final point to say on this, is that last week, the president of the African Development Bank, Dr. Kaberuka, challenged the African heads of states and the central banks to look at the $479 billion they have in foreign reserves, and requested that if they made a 5% annually in infrastructure bond, this could help boost the amounts required to reach our targets in infrastructure in Africa in the long term to come. So the opportunities for the private sector to get in as contractors, but also as implementers, and also opportunities for government to guarantee and provide an enabling environment for the private sector to do what does best, to do business.
Okay, thanks Freddie in Zambia. And Sam in Nairobi, the balance between private sector involvement, government involvement, and people outside of Kenya and their involvement in your infrastructure.
Yes, let me actually say that sometimes there is this myth that the local people do not have resources. Infrastructure projects are stalled because we do not have money. But I can tell you with authority that if our government can sort out the issue of political risk, the issue of perception of corruption in the government and even in the private sector, there is a lot of money out there to finance infrastructure projects. I have an experience where the Kenya government floated road boards with an attractive interest rate, and those boards went like hotcakes. Currently, our government has teamed up with South Sudan, with Ethiopia, to implement what they are calling Lamport South Sudan Ethiopia Transportation Corridor. It involves development of the port, development of 3 airports, development of standard gauge railway, development of a pipeline from South Sudan to the Kenyan coast. And the project is estimated to cost about 22 billion US dollars. And the target here is not just donor funds. It will be a combination of public-private partnership and also, of course, interested donors. But I can tell you this dream is realizable as long as the investors, both internally and externally, see that there is a good return for their investment, the tax system is okay, and the political risk, as I said earlier, is lowered, and corruption.
All right, so we've had the perspective from our other guests. I'm going to come to John and Ufukile at the moment, in a moment, and talk about why would people from outside the continent invest in the country, in the continent, or give money, both governments and private sector companies. But first, let me ask you, Anton. Corruption has come up a couple of times, and Sam said if the political risk aspect, in particular with corruption, could be sorted out. Are you asked for bribes? Are you able to do business without promising something on the side? Is it a block to doing business? Be realistic.
If you do business in Africa against the French and against the Chinese, obviously it comes up. Let's be realistic. But I think if you've got ways and means to deal with corrupt officials, whistleblowing, it is, in our opinion, a decreasing tendency. If you look at the corruption index elsewhere in the world versus Africa, there are European countries with much more problems than African countries.
One hears fewer stories, I must say. South African companies, for example, operating in Africa, you used to say, well, you have to bribe people to get things. You don't hear that so much anymore, and there's much more insistence on governance than there used to be, and of course one mustn't generalize. But let's talk about foreign people, if we're clearly in the continent, investors as individuals, investors as big companies that want a return, but also governments. And if we look at, someone mentioned the old railway lines that go back to the British or French or wherever colonial times, and some of those railway lines are still in the condition that they were and have steadily deteriorated. We have a new colonialism, some people argue, by the China empire, if you like, that is growing for different motives. Infrastructure, putting in money, also food. China is reported to have bought up quite large tracts of land in Africa for the sake of growing food for their own people. So what's your say? Is this the new imperialism? Is there a risk to that?
Well, I think let me say that at least Africa understands now that as much as the world and investors out there need to make their own demands because they bring in money, Africa understands that they have to make sure that through that money coming in, there has to be more development and be part of shaping that agenda of development. For example, this issue I understood, that localization is more and more getting important. Beneficiation of local resources is becoming more and more important. And remember, also, this is an opportunity for Africa. The world, even the East, they need us. They need the resources that we have, which have been untapped for many, many years. But for us to do that, you have to go through the infrastructure. So they actually have no choice but to participate in the infrastructure. Now, there's various level of let's call it sophistication from one country to another, partly because, as I mentioned, there are different small states. To negotiate with one small state versus a whole continent, the dynamics will be different. So the trick would be then that we need economies of scale in terms of cross-country collaboration, so that when you negotiate these international agreements and these cross-national projects, we are able to make sure that the benefit is left in the country. There's more development. You see, if you don't follow that route, honestly, you're going to miss the opportunity of development, and maybe it will take another 1,000 years for this opportunity to exist the way it is.
Well, economists talk about the development of underdevelopment. What the colonials did was to undevelop countries, in a sense, by coming in, taking the resources, but not contributing to development. You actually contribute to underdevelopment. Are the Chinese behaving any better?
Well, I think if a development is such that you know, the project starts from pit, where the mine is, to the port, you know, directly. Then you'll continue to have that kind of challenge, which is what I think the colonial forces did in the past. That's why today we see there's no regional integration between our countries, because it was not the focus of the colonizers. But right now we understand, I mean, we talk about integrating the whole of Africa. So that realization is there, and we are hoping, obviously, that with more lessons learned by other countries, we can capitalize. I think there is no government that wants a project to happen without development of their people. You know, it just doesn't work, especially in this day and age. And we have ICT. Most countries now have got knowledge, so the knowledge is important. So people see it and people understand it. And I think the powers that be also understand that, well, we cannot move in the same direction. There could be one or two, because states are very small, you know, and you have to respect the sovereignty. They negotiate differently. But as soon as they see others having a different model, and they see prosperity, you know, through other nations, they'll also want it. Their citizens will demand it, and therefore, I think it's bound to happen.
John, your thoughts on new imperialism or not?
Before I get to that, I just want to address the issue of private sector. We keep talking about the African private sector. What are the private sector? What is the private sector? I think what we have, the last speaker made a good point. We need to work in consortium, you see. We need to have a harmonized and a coherent way to address African governments. Because you don't need to have individual private sector moving all over Africa. It's not going to work. This is why the Chinese have come in, because they saw this opening. If the private sector we are harmonized, we are coherent, they will form a formidable task for the Chinese. There is nothing wrong in the Chinese coming in. What is important, from my point of view, is the standard, the robust maintenance regime for the infrastructure project that they develop, and also quality assurance, and to ensure that there's a technology transfer. You see, but I believe if we have our private sector working closely with the Chinese, most of these issues can be resolved. But now we have a private sector working independently on their own, and then trying to challenge or to compete against the Chinese. That is the problem.
Anton, the story goes, one hears stories, and of course the further you are from the action, the wilder the stories are, or the less accurate they are. One hears stories because the Chinese state is so involved that it does things at cut rates. So it comes in and gets contracts, gets involved with developments, cuts out local contractors or contractors from other countries like South Africa in the continent, because the rate that they're offering or the reward that they're offering is so great. What's your experience of that?
Biggin has concluded two firm partnership arrangements with Chinese companies. It's been running for almost a year, so and we've been working with the Chinese, and there are regular visits to Beijing. We've got a local broker in Beijing, a South African company that specializes in linking Africa with Beijing. So there's a lot of translation happening into the Chinese economy and into the Chinese standards on what is expected in Africa. It still remains like hugging a porcupine, if you would.
Hugging a porcupine.
Hugging a porcupine. Careful, and but it's one of those things that you almost have to do. So working with the Chinese, I think that there has been a huge amount of lessons learned by the Chinese of doing business in Africa. They understand not leaving beneficiation behind. They understand not using local labor. In certain instances, they still do get away with it, and they try it in the smaller countries that are really looking for a big brother. And in certain instances in West Africa and certain cases in SADC, a lot of the governments have made confirmed decisions not to work with the Chinese anymore. We see that more and more in the infrastructure forums. So Africa is definitely ripening up to a solution by Africans for Africa.
Well, I'm going to ask for final thoughts. It's a little bit unwieldy having three people here, and we're across half the continent really. So let's get closing thoughts first of all from Freddie Kwesiga in Zambia. The next big thing for you, what's on your mind in terms of infrastructure? What's the next big project for Zambia?
Thank you very much. I think I enjoyed the discussion, but the big project for Zambia which is coming is the Kazungura Bridge, linking between Zambia and Botswana on the Zambezi River. It's coming up very quickly. Another one in the pipeline which needs to be prepared is the Mplungu Port on Lake Tanganyika to link both South and East Africa. So I think there is opportunity there. For me, Africa is still a land of opportunity with new markets, and also we need to seize these opportunities to boost our infrastructure, and most important, invest in our regional integration through trade and increasing job opportunities for Africans in this region. Thank you.
Thanks to Freddie Kusiga in Zambia for joining us, and you, Sam Mambo, in Nairobi. Your next big project, the next big thing that we'll see happen there.
Yes, as I said earlier, perhaps the biggest project that we are looking forward to seeing the implementation of is the LAM corridor that will link South Sudan, Ethiopia, and Kenya. We also have proposed a standard gauge railway line from the port of Mombasa via Nairobi to Malaba and going across Uganda to Rwanda. And also we have major road projects linking Kenya and Ethiopia, which, as I talk now, they are under construction or procurement.
Thank you, Sam. And the more we talk, the more they get into the detail, the more interesting it gets. To generalize about the continent and talk about the problems doesn't really help. There are particular projects which we are learning from. I'm going to move around the panel. I'm going to ask you to sum up at the end, John. You've talked about PIDA, but just 30 seconds each. First Ufakile, then Anton, and then John. Just to sum up and maybe say, what are the next big things we can expect? How will we know things are moving?
Yeah, I think for South Africa, we have what you call the 17 next big things. So the 17 strategic integrated projects that have been identified and mapped up through the country. There are 4 corridors that we're looking at, from Northern Cape to Saldanha. There's a rail corridor. We're also looking at the Waterberg, the coal corridor. We're looking at from KZN via Free State into Gauteng. There's also a corridor. And we're also looking at Northern Cape to Eastern Cape, Kucha. Now those corridors will form the basis of an inclusive project development. There's a lot of money, as you know, that has been announced, that will be spent, and we'll need private and public and private partnerships to work in this area. But the government is very committed. I'm going to have
to stop you there because of time, but even if those projects get off the ground, that is going to be a big step forward for South Africa in infrastructure terms, and there'll be spin-offs from that in other supporting infrastructure. Anton, last word from you, quickly.
I think there's a huge opportunity for South African-based firms to play a regional role in Africa for international partners. So you typically find an international partner, a regional partner, and a local partner, and South African-based firms are well positioned to play that role.
John, final word.
Okay, I think Africa has come a long way. We recognize that regional integration is the answer to development, and I believe that PIDA is the answer to moving Africa forward. We have 68 billion price tag for 51 projects. And I believe if these projects are implemented from now to 2020, you will see a different Africa. The issue of the Chinese is really a non-starter because Africa can defend itself. Africa can put policies in place to make sure that we don't go revisit what we went through before.
We're also doing a lot better than Europe is at the moment, and we can take pride in that, certainly in terms of economic growth across the continent. Thank you to Ufakile Khumalo from the IDC, Dr. John Tambi from NEPAD, Anton Bossel from Biogen Africa, Big in Africa, sorry, Dr. Freddie Kusiga of African Development Bank in Zambia, and Sam Mambo of GIBB Africa in Nairobi. We've come to the end of this edition of the IDC Dialogues. Until next time, from myself, David Williams, and my guests, goodbye.